Hi, fellow traders. What's happening? I hope you guys had a great week this week. Sorry I didn't get to do as many recaps this week as I wanted to. Missed a day. Didn't get back home till late. And yesterday we had the webinar. We had a webinar Tuesday night. I was out of town on Wednesday and Thursday. Yesterday we had another webinar. So didn't get to do any recaps like I normally do. But every time I miss one, I get flooded with emails saying, "Why didn't you do it? I need it." And so I'm going to do everything I can to make sure I get a recap out every day. You guys see me in chat, win, lose, or draw. I don't hide anything. So, you know, if I don't get to do a recap, you know why. It's either we have a webinar or I'm actually gone. But let's take a look at on the market today. Look at what it did this week. And I know Monday we were expecting a dead cat bounce. That's what we got. We may get another one. I mean, today we did hold up. We did close up pretty good. Right now the market's at 465.47. So, we're about 60, 70 cents above where we closed already. But we're still soundly below this ascending. Right now it's resistance. We're below the 50-day, the 20-day, the 5-day, and the 10-day. We're still below all of this. So the bulls are really going to have to do their work to bring this back. And anything can happen over the weekend. So I'm not speculating anything. Like most guys, I'm going to be logging on at 8 o'clock Monday night to see where the futures are going to open up. See what the SPY and the Qs look like. But other than that, we just need to wait. It looks like, we may be on the verge of having another dead cat bounce. If we bounce here, I don't think it's strong enough to make new highs. But earnings season is kicking off next week. That could be enough to drive the market. No, we just don't know. I'm not going to say never. I can only say what I see here now. And right now it looks like we may be on for another dead cat bounce. But if earnings are really, really good, we're going to go. So just to get you caught up on the last 2 weeks. Last week was an okay week. We ended the week on a weak note. Started out this Monday solid. I mean, you can't get a better day than that. And you guys that were in chat Monday, you saw how we meticulously made this happen. And it was just a really solid day. Tuesday was okay. We had some pretty good trades then. Wednesday was the day I had to leave early and go out of town. So I kind of took an ill-advised trade before I had to leave and ended up giving back the gains I made on those 2 good trades that morning. I think we had 2 base hits. And yesterday was just a crazy ass day. Thankfully, accidentally getting into Roku and then adding to it on the dip turned out to be the best. On the bounce turned out to be the best thing. And today, you guys, we're going to go over today and you'll see what kind of day we had. Ended up 42.70.02. Not a bad week. Not a bad week at all. I'll take that any day. All right, so I had a request to kind of explain how I find my stocks. If you're in chat, you see me go through this every day. It's the same strategy. Day in and day out. I have an ORB scan that I look for stocks that have a volume over 50,000, a gap over $1, ATR over 50 cents. I like the lower float stocks, 50 million to 500 million, but I'll trade higher if the chart dictates. The price range I like is $20 to $250. I need a solid catalyst. That is the key. having a solid catalyst is what makes these trades go. We've struggled the last couple of weeks. The 5 weeks at the end of the previous earnings season and before the new earnings season kicks off are the hardest weeks for my strategy. We still make money. You see, we've made money all along, but it's a little bit tougher because I like stocks that move on their own. When we're trading these stocks like NVDA and AMD and PayPal and SQ, without a catalyst, they're following the market. So if the market gets a swing, it's going to take the stock with it, regardless of how good the setup looks. So that makes it frustrating. That makes it a little choppy. And what we do to adjust is we either go ahead and incur a little bit more risk, give it more size, shorten up our profit targets, which puts it in a different risk profile or parameter, but it works. I prove it works every day, day in and day out. So, it's a totally different mindset and theory that I'm teaching you that works through any market. But the catalyst, what really takes off when we really start rolling in the dough is during earnings season, because those stocks can move 5-6 times their daily ATR. They do not follow the market, so they march to the beat of their own drum, which I love. So solid catalyst has to be the number one, and a solid daily chart. And then once I get the stocks, I vet them. I look at the daily chart, I mark support and resistance levels, and I look for the windows of opportunity, the potential profit targets, the profit ranges. And if it makes sense, then the stock goes on watch. If there's an opportunity to make some good profit, I'm not a scalper, so I'm looking for larger moves, 3, 4, 5 point moves. And then I'll transfer the daily data to the 5-minute chart. If you're using Thinkorswim, it does it automatically for you. And, I determine if the stock makes the watch list. If it makes the cut, it's on my watch list. If it doesn't, it goes in the trash with the rest. So that's a quick synopsis of how I do it. I do it live and in color every day, just like my trading in the chat room in bearbulltraders.com. Everything I teach, everything I show you here is exactly what I do. Sometimes I try to show out, but I reel myself back in. All right, so let's take a look at the day. First trade today was PayPal. If you look at down here, it just starts here and runs up. PayPal was a pretty bad trade to me. It wasn't a bad look. It was bad to me. We're trending down. I'm expecting it to, go through some profit taking, which it did. Then it started to sell off. I felt good about it. I got in. The minute I got in, it ripped up on me, so I had to stop out. This was a predetermined stop. And you can see we ran all the way back up and up into the kill zone here. And it chopped some people up in through here. And eventually we got clean and clear. This is a 52-week low. So once we took out the 52-week low, we confirmed it, meaning this candle closed below it. This candle triggered an entry. I got in. I was supposed to be taking profit here, but I accidentally added. I hit the sell button versus the buy, and I ended up shorting more. And I let it get down to the next target, and I just took some off here. And it bounced and ended up closing it once we claimed the 9 moving average. The 9 is usually my trailing stop once the stock starts working. Once I take profit, my trailing stop typically becomes the 9. And once we confirm reclaiming the 9, meaning this candle closes above the 9 moving average, and then this candle trades higher, I'm out. It's just as simple as that. The next one was Disney. Disney, I think, was a decent trade. Textbook opening range breakdown. Here's a classic case where you need to trust the chart. There's nothing about this that said this trade was failing, that the technicals were giving up. Here's the first candle. Okay, the stop on this is losing the level that we based the trade off of. That's the technical stop. So that's the 5-minute opening range low. This candle closed back above it, but we never got a candle to take out the high to confirm reclaiming this. So it just stayed below this high the whole time. It rejected. The moving averages came and converged together on the VWAP, and it just came down. Hit the first target. I did shorten this by like 20 cents because we just got stuck here, and I wanted to ensure getting profit. So I just kind of shortchanged this by about 15, 20 cents. And we hit the second target, and then it ended up bouncing, taking me out. I could have let it go, but look, it never did come back. So once we took out the 9, again, trailing stop being the 9, once we took it out, we took profit and hit the road. So that was that on Disney. SQ was the next trade. You can see on SQ, we broke down below the 52-week low. Once we confirmed that, I got in. First target was right down here, like the 131.25-ish. I think it was. Can't remember. 131.50, 131.25. And then it turned out to be a base hit, bounced back, stopped out at break even. Here, the reason why I stopped out here and didn't let it test the 9 is because the 9 was still above my entry price. It had not come down below the entry price, so I'm not going to allow this trade to take me red after I've locked in profit. So once I take profit, this goes to break even, and that's that. It did set up again up under here, but I was trading another stock. But this wasn't as clean. You can see later on in the day, we still don't have any volume. We're dealing with kind of low volume, and it didn't really move much. This is a Friday before the holiday, so that's what we've got. And the last trade, AMD. I'm trying to forget AMD. This was a pretty bad trade. I got in on the break. It pushed up. It didn't go anywhere. It sold back off. And instead of me taking it off here like I was supposed to, I decided to give it a little bit more room, test the 20. It lost the 20. I had to bail out. This was a max loss, but I could have gotten out and saved myself $100 to $150 in losses if I had stuck to the right risk parameter instead of just letting it go down to hit max loss. That's why it's important to respect the technical levels. When the chart tells you technically your trade is dead, get the hell out, take the rebate on the trade, and go on about your business. This is really important in the choppy markets to stick to your trade plan. Don't extend your stops and hope that it bounces. Hope is not a tactic, so we don't want to hope when it comes to our trading. So last trade was NVDA, and this was a bad example. I set a bad example for you guys today. I normally don't look at my P&L until after the market closes and I'm done. I said I was done for the day. I looked at my P&L because I was getting ready to do this recap, and saw that I'd only made $100 and some, and I thought I was around 300. In my head, I thought that's what I was at. So I immediately start looking for a trade to get in, which is why I don't watch my P&L. I don't like to have dollar goals or anything on the day, because what it does is it forces you to take trades that you really shouldn't. This one I was fortunate on. I bought the break of the top of this channel. We had a big window up to 270.49. I set my target for 270. That's what I wanted. So I got in, and you could see all of this choppiness, and finally it broke through, and I was going into the close. I was able to get one target. I shorted it. I shorted my target just so I could lock in some profit, because we were getting ready to close. And then once it closed, I ended up, right before it closed, I took the rest of it off. So all of it was right around that 269.35, which did give me some profit, and I did end up making $340 some. But this was a big example of what not to do, because this could have easily been a red trade, and I could have ended the day red and felt really bad going into the weekend. But that wraps it up. I'm sorry the video was so long today, but I had a lot of stuff to get through. But you guys be safe. Have a good holiday. We're not here Monday. We're back at it on Tuesday, but I will have the swing and the market analysis session on Sunday morning at 9 o'clock. So you guys be there or be square. So I will catch you later.